Hello traders, Jason here. It is Thursday, October 7th, 2010, and I just wanted to take a minute to review a mistake that I made in my trading this week. So basically what we have here is the stock PLCE. I'm trading it technically. I don't know much about the fundamentals, so I'm not even going to speak to them. But basically what I saw here was, let's see, maybe an ascending triangle, sort of a range-bound stock. Had a draw in a trend line here so you can see what I see. We had a sideways trend going on here, and we broke out above that recently. I believe the breakout was on Friday, and then basically on Tuesday I entered the trade here. Why did I do that? Well, most breakouts, well, I can't say most, but many times breakouts will reverse and test the support that they just broke, and then after that they will continue their run in the direction of the break. So not only was the stock confirming a bounce off of support on that day, but we had the S&P breaking out hard above the I'm gonna try to clean the 115.13 area right here, which has proven major resistance. That comes from this swing back here in January of 2010, and basically we broke that real hard on Tuesday. So that was a great day to be picking up stocks, to be picking up longs. Volume was pretty good on that day too. It wasn't great, but it was better than average. So, well, actually, while I'm here, I'm going to tell you what I think about the SPY right now. It's a similar story to what I was just talking about. We had a breakout of that major resistance at 115.13. Then we put in a doji yesterday. I know that's kind of small. And now today we have a bearish engulfing type candle, and you can't see my trend line anymore, but right here is about that resistance line. If you look at the horizontal red crosshair that's going across there. So what we have is a pullback to support on SPY. So as long as the S&P holds above this 115.13 line, I'm going to remain bullish for the next few weeks here. So anyway, back to PLCE and my mistake. As you can see, yesterday was not a good day for the stock. What I saw, I logged on to my platform here, which is actually Strategy Desk, and it was around 1:30, maybe 2 o'clock yesterday, and I logged on and saw that this had broken down below, back into that range that basically my condition was a breakout above that range. I wanted to be bullish the stock, and it had broken down. So here's a 5-minute chart. Basically we had a big sell-off, volume increasing to the downside, and there is that that trend line that I was talking about. So we broke down below it, and volume was really significant at that time, but it was 1:30 or 2 in the afternoon. Now I'm a swing trader, and that means I trade daily charts, so I wasn't even looking at this. Instead, I came in and saw a significant break below that line, and I sold. I even looked at the average true range, which is normally how I determine my stops, and the average true range is 1.85. This didn't really reach $2 below that that trend line that I'm talking about. So I shouldn't have sold. That wouldn't have reached my stop. I just and another thing, I don't have a stop on it, or I didn't have a stop on it at the time, because I made another mistake in not putting the stop on as soon as I entered long the position. So basically it finished the day with a rally, as you can see here on the 5-minute chart. It turned around pretty much right as I sold it, and then closed right back above that line. So now it's sitting at support where I would want to be in it, and I'm not in that stock anymore. So hopefully you can take some lessons away from that. I know that was a good review for me. Thanks for being a part of SwingHigh.com and PSU-STA.com. Sorry, check that one out too. Talk to you later.